All this money pumping in from this big spending budget, it's going to pour into housing as well.
Yeah, look, it certainly will. I mean, we've certainly seen the housing market perform quite strongly throughout this crisis, which has been surprising, particularly given that unemployment has risen so rapidly. This morning we did have an announcement from Josh Frydenberg that the 5% deposit scheme that is available to first home buyers would be extended, and that it would also have bigger price caps for Melbourne and Sydney. So really reflecting the fact that those two markets are a lot more expensive. We will see lots of infrastructure spending. We did see that big announcement last year of the $2 billion fast rail into Geelong. We're seeing more and more business cases coming through. Important for regional Australia, also important at the moment because we are seeing rising popularity in many regional parts of Australia at the moment. Social housing will probably get a mention. Social housing mainly does come under state government, but there probably will be some announcements to help out there. And also the extension of home builder is quite likely. So the home builder scheme has been very popular. It has led to a lot of activity for home builders around Australia, and it is likely we will see some sort of extension. Whether it's the same, we don't know, but there will be some sort of extension of that program.
One of the real positives to come out of what we've seen over the past few weeks is the banks, after Josh Frydenberg came out, will hopefully start to lend more, particularly to young people. We've seen the first home buyers' whole complexity expanded. Where are some of these family-friendly spots that people can maybe get a bargain?
Yeah, it's interesting. I mean, we track views per listing on a suburb basis around Australia every month, so it does give us a fair idea as to what is popular and what isn't popular. What's quite interesting, though, in Melbourne, there are some areas that are always very popular. You've got areas like Forest Hill and Box Hill, which have seen, always rank in the top 100 in Australia, but have really plummeted in terms of popularity. So primarily due to the fact that they do have very high proportions of overseas born. We obviously have zero migration at the moment, very low levels of search activity coming from overseas. So that is impacting certain areas, and primarily Melbourne. So Melbourne obviously is very challenged at the moment in terms of being able to sustain sales levels, so there isn't much on market. But at the moment, if you really want to get into the market, if you're a first home buyer, it might be worthwhile having a look at many of those locations.
The whole idea that this property market was going to fall through the floorboards is really proven folly, hasn't it, Nerida?
Yeah, look, it certainly has. I mean, it's interesting that we saw as early as April that search activity really rebounded very quickly on realestate.com.au. So it did look quite apparent that although seller activity really didn't go anywhere for quite some time, that buyers came back pretty quickly. So it is an unusual recession. There's no shortage of money. The big issue being that job loss has primarily been amongst young people and primarily been very concentrated on the hospitality industry, accommodation, tourism, education. So it has hit the rental market very quickly. We know that there are problems in some areas that do rely on foreign students and do rely on young people, primarily high development areas. But for established housing around Australia, we just haven't seen the price plummets that many expected, certainly early on in the pandemic.